Hey traders, Raghi here, and in this video I'm going to walk you through two of the recent entries that we have, but it starts with the US dollar. So we're going to start here with the US dollar index futures contract, and this has a lot to do with the fact that we had this Fed wick. It doesn't necessarily invalidate the expectations for higher highs. I think the Fed's tone probably does a whole lot more to make that much shakier ground, much shakier logic. However, most of this wick was created well after the last Wednesday 2 p.m. rate statement and 2:30 press conference. And this was that wick, that US dollar sell-off that ended up happening right before the Wall Street close. So kind of unusual timing on that. I am overall still a dollar bull. And I believe as long as prices can maintain support above the 96 major psychological level, I'll continue to be a dollar bull. Now that feeds into, and I wanted to mention that for about a minute, because that feeds into these two entries. So if I'm a US dollar bull on the flip side of that conversation, and in a much bigger marketplace, the Forex, Euro US dollar, the largest, most traded pair, if I'm a dollar bull, I am on the flip side of that same coin, a euro bear. And this pair, the euro US dollar, then fires on both cylinders. Dollar strength obviously helps propel this pair lower, while euro, the euro itself is affected by becoming weaker when the US dollar is strong. So obviously a US dollar strength day, US dollar strength organization only helps feed the downtrend here. So that's where you see that inverse relationship between the US dollar index I just showed you and this Euro US. All right, so the setup is a 109.90 short sell, which was taken. It was an easy fill because, as you can see, this market went all the way up to 102. I'm sorry, yeah, to 102.28. Yeah, 10.28. So with a 10.28 high, obviously we traded through the 109.90 level. We actually penetrated the 110 level. But with a point of validity, which is my stop loss here, up at 11.55, I'm in really no danger whatsoever. I will say with that 10.28, the 1.1028 high, this level here, which was that Fed wick, by the way, this was the Fed wick. This was last Wednesday. That high, as you can see here, was 10.25, which if I was going to use what I call a sizzle, C-I-S-L, a cheated in stop loss, and this would be a level that I could place a stop in front of what I call the point of validity, a cheated in stop loss. That's what I call a sizzle. That would be the closest I'd want to get, would be that 1030 level, to be just above the resistance of that high on the Fed wick. So here's one of our more recent shorts, and I have an optional profit target waiting at 107.70. And that's what we're going to continue to watch on the Euro US. That's a recent trade here, already looking like it's sinking nicely, about 70 pips in our favor right now. The other trade was the Euro Yen. So what are those individual currency stories that I can pit against the Euro weakness story that I like? And on the flip side of that, again, I'm also a US dollar bull. The Euro Yen triggered an entry this morning just by a handful of pips with a 31.48 high, the 31.45 trend following swing short entry. We are now short, and this has actually had some really nice follow through too. It's not just about the 45 plus another 25 pips here, so it's really not just about the 70 pips in terms of the cushion we now have in terms of profit. What I really like here is the fact that we've broken the 131 handle, and I would love to see the market remain below that. And so I'll be keeping a very close eye on the reaction and the action at that 131 level. And I usually like to do that on my day trading time frame, my 5-minute, and you can see that at work down here in the lower right hand corner. So again, the second entry, and again, it's a euro short. And just to give you a little bonus here, one of the other plays that I'm keeping an eye on for a euro short is against the strongest of the COM dolls, and that would be against the euro versus New Zealand dollar. And I like the New Zealand dollar strength. Again, it's the strongest of the three. If I were to look at all three central banks, the BOC, the RBA, and the RBNZ, I would consider them dovish in that order: BOC, RBA, RBNZ. And since the RBNZ is the least dovish, arguably the most neutral then, and the dairy auction, barring the last auction, which was a bit of a sell-off, down about, I think, almost 9% on the auction, overall the auctions have been better. Stronger dairy means typically a stronger New Zealand dollar. A less dovish RBNZ would also lean towards a stronger New Zealand dollar. So I'm taking the weakness story of the euro, pitting it against the neutral, arguably maybe strength story of the New Zealand dollar. And this trade is nowhere near the swing short yet on the daily, but I'm just showing it to you because at some point here in the near future, and I'll continue to monitor and adjust these levels, but at some point in the near future here, I'd like to set up a trend following swing short on a rally. We do have a hot zone tonight. I don't think it's enough to close the distance, but just heads up, we do have a New Zealand dollar trade balance release at 5:45 p.m. Eastern Standard Time this evening, late this afternoon, if you want to look at it that way. So just a quick look at some of the trades that are open on my radar, and also where my head's at in terms of some of the strength and weakness stories in the market right now.